Well, thank you everybody who's joined so far. It's good to have everybody here today. And the reason we're doing this webinar is just to provide a resource for you. Many of our clients have had questions about the employee retention credit, and we wanted to provide some expert guidance in that area. So just introducing our esteemed panelists here, we have Brooks Bailey, and Brooks is a CPA, the founder of Bluegrass Bean Counter. And he's an expert in the employee retention credit, has been working with that for quite some time. And Derrick Rogers, many of you know already, is from Breeding, Henderson and Horde. And Derrick is our CPA tax preparation advisor. And many of you work with him already. So Derrick is here as well to weigh in. If you don't know already, am Eden Houghtaling, and I am the founder of Pinpoint Business Solutions and the advisor here. And I also do lots of other stuff wherever I need to roll my sleeves up, but most of you here will know me already. So just jumping in, we're hoping to spend about 20 minutes or so talking about some questions we have prepared for the employee retention credit, but feel free to ask questions in the Q&A, and we should hopefully have a few minutes at the end for any specific questions from all of you attending today. So Brooks, can you first of all tell us what is the employee retention credit?
Yeah, so it is a, think of it as a refundable credit, money back to you through your payroll tax returns. So through your quarterly returns, it's a refundable credit through that vehicle. One important thing to note is it is in a roundabout way taxable. So you have to reduce your wage expense in the calendar year for that quarter, which again, in a roundabout way makes it taxable. And so it's a big distinction that we saw ourselves explaining a lot, in difference from PPP loans, which were essentially free money. These are same bucket, but different in that it is taxable.
Okay, good to know. Good to know.
And just to add, oh, sorry, I was going to jump in there real quick, just so everybody understands. So if you go back and you apply for a 2020 credit, you have to amend your 2020 tax return. So that'll be any business, and if you have a pass-through entity, your personal returns as well. And the same thing for 2021. So just keep that in mind. So if you've had any life-changing events, marriages, divorces, anything of that nature,
something
that
you may not want reopened.
Yeah, some issues you may not want to bring up. You know, just think about those things, because your credit may not be enough to tackle the hassle of doing something like that. But just something to keep.
Okay, so the actual credit is taken on the 941s, you said, which is the payroll tax return, but which we typically have done through our payroll service providers. But you also would need to amend your income tax return as well. Gotcha.
A lot of amending, yes. Yep.
Okay. So how much would, Derrick spoke about whether it was worth it or not. So how much can a company potentially receive from this credit? Is it something that's worth it?
Yeah, so up to, if you qualified for all quarters, $26,000 per employee. So if you had 10 employees and they all qualified for the maximum, it's $260,000.
Wow.
So we've had clients get more than that. We've had clients get less than that. Just depends on how it all shakes out.
So depending on which quarters you qualify for, and depending on how many employees you have.
How much they paid, if it's, yes, all the different things.
Okay. So give us a little rundown on who would qualify for the ERC. I think that's kind of why we're all here today, is finding out, do we actually have a chance? Yeah,
there's really three buckets. One is a gross receipts test. And that's an important distinction. It's not a, taxable income, net profit test. It's a gross receipts test. And so we would love to walk people through that calculation, but the short version is you look at the calendar quarters in 2020 and 2021 and compare them back to the same quarter in 2019. And depending on the quarter and the year, if your gross receipts went down, you may qualify, depending on which calendar year that falls in. And so a good example is you may not think you qualify if you made more money, but we've had a handful of clients who, due to various circumstances had their best years profit wise, and in the same year, you know, their actual gross receipts were down in various quarters compared to those same quarters in 19. And most of our clients are cash basis, and that's not an uncommon, you know, not an uncommon event to happen. So that's one. That one's more cut and dry than the rest. The second that we've had a lot of success with as well is if your business was fully or partially suspended due to federal, state, local laws and statutes. Good example there, we have some optometrists, some vet clinics, and even if your like waiting room or lobby was closed, so a good, you know, if you didn't already know, optometrists actually don't make a lot of money on the actual eye exam. They make their money when you buy a pair of glasses or sunglasses. And so with their, you know, with their waiting room being shut down, that counts as a suspension of business. And so we were able to qualify vet clinics, optometry offices, stuff like that for those types of shutdown. It doesn't have to be a full, you know, hey, this area is quarantined, you can't come in. There's some flexibility there with partial suspension. The IRS talks a lot about banks, and so banks are a good example where you can still go through the drive-through at the bank, but if the lobby is closed, even if those tellers are working remotely, it still counts as partial suspension. So there's a lot more gray area there that we can still verify, you know, based on certain information.
So let me ask you a quick question about that. With many of our clients, they have a situation where, you know, they're doing like in-home consultations. And so that was not possible because of, I don't know if it was technically a mandated shutdown. I think in some areas for sure it was.
Yeah.
They did sometimes work around and try to do remote consultations. So would that be something that could possibly qualify them?
Possibly, yeah, definitely worth exploring. I could see it fitting in those same criteria of partial suspension.
Okay. And then you mentioned a third bucket as well.
Yeah, third is a, you know, supply constraint issues. And so, you know, if you were unable to receive product and are able to trace that back, and as we spoke before, you have some clients that maybe have a specific set of vendors or maybe one vendor that they have to purchase material from. And in that case, that bodes well to be able to go back and see, okay, we weren't able to get material from October 1st to October 17th. And then, you know, that period of wages paid could qualify. And so
Oh, wow.
It's probably the most gray in my mind of, but if you have a set, you know, list of suppliers, then there's definitely conversations to be had there.
Okay. Excellent. So just kind of circling back to the first point you made about the difference between the gross receipts being lower in 2020 or 2021 over 2019,
Yes.
you still could be more profitable, meaning your bottom line may have increased, but what's really being looked at is your top line number, what your sales were, right? So if that
Yeah.
sales number is lower than the previous year's quarter, then that might qualify you.
Yeah, you nailed it. And then even then there's a kicker of like in 2021, if you qualified, say, for the second quarter of 2021, because your gross receipts were down at least 20%, you actually can use an alternative calculation for the next quarter. And so the third quarter would qualify as well. So it's created some interesting situations where it almost seems too good to be true. Like I've had that same feeling like everybody else. Like when the PPP money came out, it's like sounds really good, but almost too good to be true. And then it really was forgiven. We've had some of that same, you know, they do, you know, businesses that we think may not qualify end up qualifying for some significant amounts of money that, you know, I'm sorry, I was reading the question, that you may not otherwise have thought.
Yes, and I hope that's the case for some of our attendees today. Mark was asking, down 20% from what quarter?
Yeah, so you look at 19 is your base. So if you're looking at qualifying an entire quarter's wages, say you're looking at the first quarter of 2021, you would compare that gross revenue in 2021 to that same first quarter of 2019. And if it's down 20%, or if it's 80% of, is the way the rules read, which is confusing to me. If your gross receipts were down 20%, then that quarter would qualify.
Okay, excellent. So our next question is, how much will it cost to check if one of our clients is eligible for the ERC or not?
Yeah, so we would love to do that consultation for free. So we have a list of information that we can send over in conjunction with the conversation, because that suspension and supplier constraint is really warranted a conversation to find out more information about every business's specific situation. So, you know, a free conversation, and we'll run the numbers after getting a handful of reports to see if you qualify in any one of those areas. And I'll just want to add too, I mean, we do have to factor in PPP forgiveness. And so we've had a handful of situations where, you know, we can't double count the same dollar for PPP. I don't want to dive too far into the calculation, but if you received $200,000 of PPP money and that was your entire wages paid for the whole 2 years, then in that example, you would have no, you know, you might qualify, you just don't have any wages left to use. So we factor in a handful of things that's probably been one of the biggest confusing factors that of the 76 that we've done now. You know, they may think off something like this, ooh, we qualify for 260,000. And then after all the ands, ifs, or buts, it may be a very different number, which is what we're here for. That's what we would love to help find out.
Understood. So we mentioned a handful of reports. So what exactly is the information that needs to be gathered in order to check for eligibility?
Yeah, so really three big ones, or three big buckets. One I mentioned would be, you know, your gross receipts, or really, I'll say a P&L by quarter. So 2019 by quarter, in whatever basis you use for your tax return. So if you're a cash basis taxpayer, we would eventually tie that out to your tax return to make sure, you know, everything's kosher. But so a P&L by quarter for 2019, 20, and 21, and that way we can compare those quarters back to 2019. So we would look at that. The second one would be payroll by employee by quarter, which has proved interestingly difficult to get out of some payroll software. So if you paid $10,000 of wages in the first quarter of 2021, we would need that $10,000 of wages broken out by Derrick, Brooks, and Eden that ties back to 941. So we won't worry about tying out to 941 at this point, but just payroll by employee by quarter.
Okay.
And then the third one is that PPP forgiveness. So the bank sent out a little one-page form called in most cases, a 3508S. I'm 99% sure that's right. I should have looked before this call, but I think it's 3508S. And if it's more than a certain amount, I think the S is dropped. But that gives us the information we need to not double count money that was already forgiven through PPP forgiveness.
Okay, that totally makes sense.
So
And
those three,
so,
yeah.
and so you said that with the quarter sales report, the profit and loss, so we want to make sure we're sending the same basis that you file your taxes on, right?
You got it. Yeah,
Okay.
you can't pick and choose.
Gotcha. I have walked down that road before and it
Yeah.
didn't go well. Derrick knows.
Yeah.
Have to
They did
redo.
that 2019 on cash and then
Yeah. Yeah. Right.
So just checking your basis, you can check what basis if you're not certain with your tax preparer on your federal tax return will state what basis you filed on, and then you would want to provide the same reports by quarter.
Yeah.
So now the big question, I'm actually going to pose this to Derrick. So the reason why this has been brought to my attention is so many people are getting inundated with offers to help someone apply for the ERC, and really excited about what it could mean. But is there any potential risk in applying for the credit is my first question. And then also if you could just mention like how we should evaluate who's helping us with this.
Yeah, I mean, it's funny you bring it to me because I'm the most conservative of the group on this thing. I mean, obviously there's a risk always to apply, but I think the thing you got to watch out for is you got to hire somebody that you trust that's actually going to do the work. You know, we're seeing a big influx of clients that are getting contacted by these companies that have popped up overnight. And they're like, they're not getting any information. They're just helping you prepare the 941s and send those off. And they're just using some gray areas to qualify you. And then they promise you a guarantee if you get audited, they're going to be there for you. But the problem is, by the time you get audited, they're gone. So I think the big thing is hiring somebody that's going to actually look at the information, that's gathering the materials, as Brooks mentioned, and really evaluating what you're doing to make sure you qualify. I mean, because you're talking big time dollars. And the other thing is, you'll notice in the news that they've, put a bunch of money in to hire a lot of IRS agents. Bringing in that many IRS agents, they're not going to sit them down and teach them the ins and out of the 10,000 page IRS code or the IRC. They're going to train them on one issue, and it's probably going to be the ERC, and they're going to start hammering people. So I think there's a lot of fraud going on here. So take your time, vet the people you're going to hire, make sure they're getting the information that Brooks has suggested you get and look at before you take those guys on.
Yeah.
Right. And when I spoke with Derrick about this, he mentioned that this is not his wheelhouse. It's not something he's chosen to focus on. And so he brought us to Brooks as someone that he knew was focusing on this. As Brooks mentioned, he's already done 76 of these. And so he's got he's quite a bit of experience with it. But just whoever you choose to go with, just be careful about not only that they're, an established place, but that, as Derrick mentioned before, that they're going to be around if and when this is ever brought into question, that they're there to support you through it. So I wouldn't want anyone to feel afraid of taking advantage of it if you qualify, just like the PPP loan, but just knowing that's important to have the right people in your corner to help you through the process.
Yeah, I mean, I would be if it's my business and I'm looking into hiring somebody, I'm looking at hiring, somebody like Brooks that's got a CPA firm, because he's going to be, when the ERC credit's gone, Brooks is still going to be there practicing. Somebody that just started up the ERCcredit.com company is not going to be there next year. They're going to be gone. They've taken your money and they're on to whatever the next scam is. Yeah. So just be careful. They're really looking into this. They've extended the statute of limitations, so they're giving themselves more time to kind of look at your stuff. And I think, if I'm kind of forecasting where they're going to look, I'm thinking, if you have if you look at your 2019 tax return and you look at your 2021 tax return and you have a reduction in your gross receipts, they're probably not going to really look at you that much. But if you don't have a reduction, you better make sure you got your I's dotted and your T's crossed, because they're going to be, that doesn't mean you didn't qualify, but that's probably where they're going to focus.
Yeah.
Okay.
I have the same thoughts.
Yeah. But that doesn't mean you don't need to reach out to somebody like Brooks and right. Just, it's worth, obviously he said the cost is zero for him to look at it. It is definitely worth looking at, because if you can get $200,000, that's a lot of money that can help your business.
Right.
And everybody, no matter what you believe, everybody's doing it. So don't take the high road that you don't deserve the money.
Right.
Get it where you can.
Yeah, we saw a lot of that with PPP,
Yeah, I mean, people were taking the high road and then it's gone. And, your neighbor may tell you they didn't do it, but they're not telling you the truth.
Yeah.
Everybody missed out. We missed out on a really good provision during a difficult time that helped a lot of our businesses, stay thriving. So
you're mad about all the taxes you've been paying all these years. Well, here's your chance to get some of it back.
That's right.
So take advantage. Everybody else is doing it.
So I'm going to go ahead and put Brooks' web address where he has a fill-in form if you want to find out more information. I'm going to put that in the chat, but if someone could just confirm that they can see the chat, even though they can't reply in the chat, that would be fantastic. If you could confirm in the Q&A. And I'll make sure that everybody gets it if they don't get it here. His phone number is there, and also his contact info. If you would like to reach out to Brooks for a consultation, he's more than happy to help out with that. And I do see that we also have a few questions. So one question from Nina was, how long does the process take? And from the consultation point to actually receiving the money, is there a time frame where they will run out of money similar to the PPP loan?
The second question's way easier. The answer is no. There's not a limited bucket of funds. The first question is, we've seen anything. The first ones we filed took 9 to 10 months. So the actual process I'll back up to, by the time we get the information to preparing the returns, typically 2 weeks, maybe 3 weeks, just kind of depends on the complexity of it. That's not the long part. The long part is then we have to mail it to the IRS and wait for somebody to open it and process it.
Yeah.
So in the beginning, it was a good 10 to 11 months, which created some interesting situations of paying tax on money that you haven't yet received. And so it seems to have gotten much quicker. I think the most recent, we're closer to like 16 weeks, which is, I guess, like 4 months. But in all honesty, we have no control over that. At some point we'll start calling and, we can check on the status, but that's been a frustrating piece of it is, it's more like you send it and you kind of forget about it, and then maybe you don't forget about it. And then at some point in the future, you get the money.
Yeah.
So there are some options. Go ahead, Derrick.
You said something about calling. That's the hard part right now.
Oh my gosh. And that's
to staff the phone. So you can't get through to them.
You can't. And that's a good point, is that we were able to call up until like 3 months ago. We were able to call and I had a client I've been trying to call for the last like 3 weeks, and they have one that's been out there for 9 months still. And it's like, I don't know, we'll just keep trying. So that is the problem.
Because it's all by paper. We can't electronically file these amendments. Okay.
Right.
Mark go ahead, Derrick.
I was gonna say Mark's question about the PEO. I'll defer that to Brooks. I don't know. Quick look, it looks like it probably does qualify, but we probably have to dig in and just make sure.
Yeah, just an extra. So yes and yes.
Okay, so PEO is give Brooks a call and he will.
Probably the answer to the PEO is probably, but we just need to qualify, because that's not something that everybody has. That's kind of a unique situation.
Yeah, we've had that. We've had common paymaster type things where just an extra layer of time back to do.
Okay. And then another question that Mark had was, if you open the business in 2019, towards the end of 2019, with the PPP loan, they had an alternate way to calculate whether or not you qualified. Is there something similar for the ERC?
There is, and I don't know the rules off the top of my head. They did have something I can definitely help walk through. But there is a certain set of rules there where if you opened your business in 2019 or even during the pandemic, they have some rules depending on the type of business, like if it's a COVID specific business or cleaning, something business, there's a different set of rules. But yes, there's an alternate way to calculate for the employee retention credit.
Okay. Awesome. Well, it looks like I don't think we have any other questions at this point. Would you like to add anything in conclusion, Brooks, at this point?
No, just I think to Derrick's point, we saw a handful of clients who felt bad or seemed like they felt bad because we brought this to a lot of our clients that we did the books and or tax return for. And similar to what he's saying, if you qualify, this is money on the table that takes a little work to get at and do, but don't let the perception that, you're getting something for nothing. It's worth doing, and I would not feel bad for doing it. It's just make sure you cross your T's and dot your I's, because for all the reasons previously stated, I guess.
And correct me if I'm wrong, Brooks, but once you send that 941 in, they don't verify anything.
No, and that's why I think
you're going to get the money back.
Yeah, they're going to send the money, which is why I think, and we've talked about it, the extended statute is there's very little verification. I know they verify the accuracy of the amended return, but they're not, to my knowledge, verifying any oh, you were actually partially suspended. Oh, you did actually have this. We send in a little 1-page thing to hopefully help alleviate some of that down the road and preparedness of potential audits. We send some support with that, that you know, our calculations for doing it to try to prevent some of that from happening down the road. But yeah, they're, to the best of my knowledge, processing it, making sure it's accurate. Just the form is being calculated accurately and sending out the check, which is why I think the common consensus is there's going to be a lot of scrutiny around those after the fact. It's more of like,
Yeah.
get everybody the money and then we'll worry about catching the fraudsters later.
Yeah, it's very easy to file a fraudulent return
Yes.
in that regard because there's no verification. They're just doing a math check to make sure line 1 times line 2 equals line 3 or, you know, whatever. So
if I had to sum it up, I would say definitely check into it because it's worth it. You should take advantage of it, but make sure that you're using somebody you can trust to assist with the process. And
if you're not gonna use Brooks, definitely reach out to Eden or me if you work with us, and we can definitely look at them and see if we agree with, you know, whoever you're going to use or whatever their calculations are. So don't be afraid to reach out to us too. I mean, I know enough to tell you no, but I don't know enough to complete it accurately.
Right. So with that final question that we had, yes, if you are already clients of Derrick's and ours, our suggestion is that you reach out to Brooks or another trusted specialist with the ERC. But definitely, Derrick and I have not vetted each client against the rules because the rules are very complicated, as you can see. So we would want to refer you to a specialist. So I would really like to express much gratitude to both of you guys for being on here today, and really, really appreciate all of your help in understanding this. I know I have a lot of clarity. And again, if you haven't already picked up Brooks's contact information in the chat, it's there now, and you can reach out to me after the webinar if you still need it as well. So thank you both for everything, and I hope everybody has a fantastic rest of your day.
Thanks for having us.
Take care.